Wall Street closes higher ahead of the release of jobs data for April, but indices remain on track to post a losing week. Shares of Apple surge in after-hour trade as it announces a $110 billion share buyback after its earnings beat street estimates, even as iPhone sales drop. Stocks India Asia Pacific trade largely higher, tracking cues from Wall Street. The Japanese and Chinese markets remain shut for trade, with the GIFT Nifty suggesting a higher start for the Indian market. Crude prices edge higher, come off 7-week lows. Brent crude trades at around $84 a barrel. The RBI lifts curbs in Bajaj Finance, allows resumption of lending through e-com and Insta EMI cards. Sources also tell CNBC TV 18 that private equity firm Carlyle is set to sell up to 1,500 crore worth of its stake in Yes Bank via block deal today, while Coforge will acquire Signity Tech for 1,415 rupees a share. In key numbers to track, jewelry business margins will be key to track as Titan reports its fourth quarter numbers today. Also watch out for numbers from FMCG major Britannia as it reports numbers in what has been a soft demand environment for FMCG companies. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking for you. But first up, as always, let's take a look at what the Asian markets are doing currently. Now, remember, Chinese and Japanese markets, they're shut for a holiday, so we do not have rates coming in from Shanghai and Nikkei. But the other indices are doing quite well. We have the Taiwanese index, which is up around 1.3%. The Hang Seng is also surging in trade, up around 338 points. So both of them looking really good. If you look at something like a Kospi, that's too higher in trade, up around 0.2%. So across the Asian markets, there is a green-looking market right now, and that is courtesy what we saw in Wall Street as well. But let's take a look at the GIFT Nifty because that is the one which will indicate the moves in our own markets. Well, yes, 120 points higher, so it is indicating a strong start for Indian markets as well. But let's move on and talk about what's happening in the US markets now, because Wall Street ended higher on Thursday as investors looked ahead for important corporate earnings and the key labor report set to release today. Dow Jones added over 300 points, the S&P gained 0.9%, while Nasdaq advanced over 1.5%. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes Thursday as investors took stock of corporate earnings and waited on the monthly jobs number, which is due Friday. The Dow up 322 points, the S&P added 46 points, and the tech-heavy Nasdaq rising 235. Federal regulators today accused Scott Sheffield, the co-founder and chief executive of shale producer Pioneer Natural Resources, of trying to collude with OPEC and its allies to inflate oil prices. That's according to several reports. The move comes as oil giant ExxonMobil reached a deal with the FTC to close the $60 billion acquisition of Pioneer. As part of the deal, Sheffield will be blocked from joining the board or serving as an advisor. In a statement, Pioneer wrote that the FTC misunderstands the global oil markets and misread the intent of Sheffield's actions. The CEO of Peloton, Barry McCarthy, is stepping down as the company announced today it's cutting about 15% of its staff. It's all part of Peloton's latest restructuring plan to reduce annual expenses by more than $200 million. As the company says, it will rein in spending and realign its cost structure to its business size, all in an effort to have a sustainable and positive free cash flow. Peloton's chair, Karen Boone, and director, Chris Bruzzo, will serve as co-CEOs while the board searches for a permanent replacement. That's what's happening here in the U.S. Back to you in Mumbai.
Okay, all right, it's time to listen to some important opinion coming in from experts reacting to the Fed's decision to keep the policy rates unchanged and the overall market outlook as well.
Obviously, the right thing by signaling that they are aware that inflation has been stickier than they had expected. You know, I think he's right to say right now their primary job is inflation and getting it under control, and it's become more difficult. So I thought the message was roughly the right one. Obviously, it was important to take off the table right now, at least, the possibility of a rate hike. I think at this stage it's unlikely, but you know we'll have to wait and see if the data holds, and that will drive what the Fed does. I think there's been a disconnect between the market and the Fed for a period of time. When the Fed was thinking maybe 3 cuts, the market was thinking maybe 5. when the Fed was probably thinking a June start, if at all. The market was thinking a March start. So I think that's where the risk is right now. So yes, he's certainly pushed out. And I think it's 50-50. There may be no cuts this year at all, depending on the incoming data.
I think you got it absolutely right. I think, in fact, there will be rate cuts. Not as many, certainly, as we thought 6 months ago. But when I look at the factors that have made this inflation sticky over the last 3-4 months, namely rentals, car insurance, we saw a break in commodity prices this week for the first time in 2 months. That's a good sign. So forward looking, I do think there are very favorable signs that inflation is going to calm down.
The basic story of the economy coming into the year is still the baseline case. Inflation coming down. You know, the chair and others have used the bumpy road analogy. To me, it still looks like a bumpy road and not yet a U-turn. But also, I think the committee and we all should be, that dreaded word. We should be data dependent. In the last 3 months, the inflation data has not been good. I really do think that I'll start off with what they think. And in fact, the chair was very specific yesterday. He said, we judge policy is restrictive. We also judge if we keep it here at this current level, it will be sufficiently restrictive. He said it's unlikely. Indeed, your sound had that. It's unlikely they hike. So I don't think this is about mortgaging the house. It's about probabilities. But I think the baseline is the next move at some point will be a cut.
I think that the current interest rate environment is going to be sufficient over time to slow the economy. So when I think about the Fed meeting yesterday, I learned 3 things. One, the bar to hike rates for the Fed is still very high. They'd prefer if inflation is not cooperating with them just to keep rates on hold for longer. And then ultimately, the next move that's most likely is a cut. So with that known, the second thing that I took away is what does it mean for interest rates? Well, if the next move is ultimately going to be a cut, it may be further away, but ultimately the next move is lower. That means there's a limit to how high yields can go, at least in the near term.
Okay, that's a slew of opinions on U.S. markets, but let's get you some more global cues now. Shares of tech giant Apple surged after its second quarter earnings was slightly above Wall Street expectations. The company also announced a $110 billion share buyback, the largest in the company's history. CNBC's Steve Kovac gets us the earnings fine print and more.
It's a beat on the top and bottom line for Apple, plus the largest buyback in corporate history. Let me go over the numbers first. EPS is a beat here at $1.53. Street was looking for $1.50. Revenue, a slight beat, $90.75 billion versus the $90.01 billion expected. And then as for that buyback, $110 billion. Like I said, that's the largest ever announced. That's according to Birani Associates. And then a dividend is increasing to 25 cents a share. And just a couple little segment revenues here. Let's go over iPhone. A slight miss of expectations at $45.96 billion. That's down better than 10% year over year. And then services, a slight beat here, $23.9 billion. That's up nearly 14%. And then as for China, I know that's a big question going to here. Sales in Greater China down 8%.
Well, let's stay with Apple. In the company's earnings call, CEO Tim Cook said Apple reported strong double-digit growth in India. He called India an incredibly exciting market, which is a major focus for the company, and he sees enormous opportunity here. Okay, it's time to get you the final update on our global market wrap this morning. Mixed cues coming in from European equities. The French CAC lost 70 points. The German DAX slipped 35 points, while the British FTSE closed with gains of about 51 points. In important earnings from the region, Danish drug maker Novo Nordisk beat first quarter earnings expectations with sales of its popular weight loss drug nearly doubling in the first quarter. However, competition from rival companies forced the company to cut prices of its weight loss drug, knocking its share lower. The other Danish company on the deck was shipping giant Maersk, which missed earnings expectations, but raised its full-year profit guidance, citing strong demand and higher freight rates. The company said that shipping disruptions caused by Houthi militants' attacks on vessels in the Red Sea were expected to last at least until the end of the year. Okay, all right. On that note, we'll slip into a break. But when we come back, we'll tell you all these overnight cues, how they will be impacted on our own market. Stay tuned for that. Welcome back. Well, we now have our research team joining in to tell you what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Sudarshan, let me come across to you. Positive cues coming in from global markets today.
Morning, Sonal, that's correct. So, well, the handover that we're getting from US market, it's strong. US market has regained almost all the losses seen in the previous two sessions. Indices were up in the range of 1 to 2%, and it was led by the tech majors, especially Apple, which announced its earnings for January to March quarter, and earnings were above estimates. Also, it announced a buyback program of $110 billion. And if you want to know how big it is, it's more than the combined market cap of 46 Nifty companies. And next major cue for us is crude that continues to remain steady. Brent is hovering around the level of $84, which is the lowest level in nearly 2 months. And tracking all these, GIFT Nifty is indicating a start near record high for Nifty. And this comes after a flat close that we witnessed on Thursday amid a range-bound session. Frontline indices had closed with a positive bias, while financials dragged for second straight day, especially the likes of ICICI Bank and Kotak Mahindra Bank, which were lower tracking their news flow. And the same sentiment was reflected in the institutional activities. FIs have turned sellers after buying for 2 consecutive sessions, while buying by DIIs has continued for 8th straight session. And coming to stocks to watch from Nifty pack, keep an eye on Titan Britannia, which will be announcing their earnings for Q4. And besides those, Bajaj Finance will be in focus as RBI has lifted restrictions.
Okay, all right. So that is the market setup. Thank you so much for that, Sudarshan. Let's go across to Vamakshi because she will list out all the stocks which will be in focus today. Good morning, Vamakshi.
Well, good morning, Sonal. Let me first start off with Bajaj Finance. RBI has lifted restrictions on e-com and online digital Insta EMI card with immediate effect. Apart from that, keep an eye out on Coal India. Revenue has seen a downtick of 2%. Margins, however, have improved substantially to 30.3%, and net profit has resultantly come in nearly 26% higher. Ajanta Pharma reported numbers that were better than what the street was expecting. Revenue seeing an uptick of almost 19.5%. Margins have improved from 16.9% to 26.4%. Net profit has seen a surge of almost 66% on a year-on-year basis, and in fact the board has gone ahead and approved a share buyback of up to 285 crores. Coforge has reported a contraction in margins. Margins now stand at 12.8%. Net profit is lower by almost 5.6%, and more importantly, the company has announced that they will be acquiring nearly 54% share capital of Signity Technologies is 1,415 rupees per share. Yes Bank sources say that the company is likely to be, a block is likely to be launched today. Carlyle is looking to sell nearly 2% stake worth 1,500 crores in the company. KEI reported a mixed set of numbers. Revenue saw an uptick of 18.2%. EBITDA is up almost 21%. Margins are marginally higher, and net profit is up almost 22%. JBM Opto net profit has come in at 62.5 crores as compared to 28.4 crores, and margins have also seen an improvement of almost 100 basis points. IEX in its April in the April business update reported a 14% jump in the total volumes. Market clearing price in the D-head market was, however, lower by almost 6%. MOIL also reported an operational update for the month of April, and manganese ore production is up nearly 22%, while the sales are up nearly 17%. Mascow Dock has signed a shipbuilding contract of $42 million with a European client. And lastly, we will be focusing on Max Estates. They've signed agreements for potential group housing residential development in Gurugram, and the GDV for this project is around 9,000 crores.
Okay, all right. Thank you so much for that list. Let's talk about the cues from the F&O space now. Manglam is joining in. Hey, Manglam.
Good morning. So, we saw an interesting move in yesterday's trading session. There was the Nifty, which was doing well, and it was buoyed down by the Nifty Bank, which was lower as well. So the Nifty Bank was down by about 1/3%, and that kept the Nifty's gains in check. No problems with the mid-cap index, which was up by about 0.5%, outperforming as well. And now the GIFT Nifty is indicating a strong start. The question is whether that strong start would be used by bulls to sell into, bears to sell into, or maybe bulls to pile on to those gains. The FIs, they sold in the cash market once again yesterday after 2 days of both DIs and FIs buying. Now they've gone back to, the usual, where the FIs sell about 965 crores and the DIs bought about 1,047 crores. But in index futures, it was interesting. The FIs bought about 364 crores. Now, on a net basis, this number looks small. It's just 364 crores. But the trade that is going on out there is FIs are going long Nifty and short Nifty Bank. So if you look at, the internals, the FIs have actually bought 1,000 crores worth Nifty futures, and they've sold 670 crores worth Nifty Bank futures as well. So that's telling you that, Nifty Bank could continue to see some pressure, whereas the Nifty moves ahead. The FI long exposure, 53% versus shorts of 57%, and the net long exposure is close to around 25,600 contracts. On the way up, the street is expecting for some sort of resistance around the level where we're likely to open today. That's 22,850, because the 22,700 call is extremely active. On the way down, however, the 22,700 put and the 22,600 put, both of them active, telling you that there is strong support zone around 22,550 odd levels itself. The only fly in the ointment is the way the India VIX has moved. The India VIX has surged about 30% in just the last 2 weeks. So volatility is back in the game. And watch out for Aditya Birla Fashion and Retail. The stock has entered F&O band.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. We'll slip into another break. When we come back, we'll talk all about commodities. So stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's talk about some more news updates. The RBI has lifted curbs it had earlier placed on Bajaj Finance. Abhishek is here to give us more details on what these restrictions that have been uplifted.
Well, RBI 6 months ago, or less than 6 months ago, had placed restriction on 2 key products of Bajaj Finance, which is the e-com as well as online and digital, Insta EMI cards. So they have lifted restrictions on both these products. They are high margin for Bajaj Finance. BAF had written in Q4 FY24 PPT, that is presentation, that they have made request to RBI for lifting these 2 product restrictions. So FY25 guidance they had given in their PPT, assuming that these restrictions will be lifted. AUM growth on track with respect to 26 to 28% in FY25. Net interest margin will be lower by 30-40 basis point in H1 FY25. Credit cost will remain at 175 to 185 basis point in FY25. So they were already anticipating lifting of these restrictions by RBI in their numbers. Analysts do say that not much of an upgrade with respect to EPS expected. However, this can be a positive catalyst for re-rating of the stock. Back to you.
Okay, all right. That's about Bajaj Finance. Let's move on now and go across to Manisha. She's joining in with all the update from the commodity markets. Hi, Manisha. Good morning. Crude continues to be in focus.
It does, yes. Thank you for that, Sonal. We're trading at a 7-week close when it comes to the crude oil prices, and it seems to be getting stuck on the lower side of the range here. If you look at this week itself, we are down by 6% on the crude prices, higher for longer U.S. interest rates, and of course the limited crude oil disruptions from the Israel-Hamas war. The premium that was getting created in crude prices seems to be going away right now. Also, the global diesel demand is seeing a slump. We've seen that in India. The U.S. also seems to be reporting it, and the latest numbers from Europe also are slightly on the weaker side. A couple of things that the street will watch out for. One is the U.S. non-farm payroll data that comes in today. And the next OPEC meeting is now, by the way, on 1st of June. But the street believes that OPEC will continue the voluntary 2.2 million barrels per day of a cut beyond the month of June as well. So that is where the markets are seeing support from. But the metals is an area that you should keep an eye on because we've seen some profit taking come in for these one. Copper has come off its 2-year highs. There is profit taking in the month of May after 16% gains in the month of April, and the prices are still 30% higher from its 2024 lows. The U.S. factory activity also has slowed down in April, and that seems to be weighing onto the markets as well. So not just copper, but steel is extending decline. The global geopolitics and uneven China demand seems to be weighing on these prices also. In addition to that, the China new home prices also fell in the month of March and in the month of April as well. So it's going to be a 16 months of constant decline. That's weighing on metals also.
Okay, all right. Thank you so much, Manisha, for getting us up to speed with what's happening in the commodity markets. Let's now get you some international updates. Anti-war student protests in North America are expanding, with students in the University of Toronto being the latest to set up encampment on campus grounds overnight, calling for peace and demanding that their schools divest from Israeli companies. Tensions in the United States also surge as police clash with students at the UCLA campus as well. NBC's Alice Barr has the latest.
In the latest flashpoint in the anti-war protests roiling college campuses across the country, police in riot gear cleared a pro-Palestinian encampment at UCLA, arresting hundreds of protesters who refused to leave.
We're a civil society, and order must prevail.
President Biden addressing the growing unrest.
I understand people have strong feelings and deep convictions. In America, we respect the right and protect the right for them to express that. But it doesn't mean anything goes.
It comes after clashes between police and protesters on several campuses, including Columbia University in New York, where the NYPD cleared demonstrators who breached a building and barred the doors.
Violent protest is not protected. Peaceful protest is.
The president referenced students' rights to walk to class freely and condemned incidents of anti-Semitism and all hate speech.
It's all wrong. It's un-American.
That as demonstrators held a rally against anti-Semitism at George Washington University in the nation's capital.
Be loud and stand together against anti-Semitism.
Where a largely peaceful pro-Palestinian encampment has been underway all week, echoing demands across the country that universities cut financial ties with Israel and the Biden administration stop supporting Israel's fight against Hamas. President Biden saying the protests have not forced him to reconsider his policies as his administration presses for a ceasefire deal to pause the fighting, surge aid to relieve Gaza's humanitarian crisis, and bring Hamas-held hostages home. President Biden also said no when asked if the National Guard should intervene on college campuses. And as former President Trump has sought to blame President Biden for the campus unrest, the president said today this is not a moment for politics. In Washington, Alice Barr, NBC News.
Okay, it's a developing story. We'll keep getting you more updates on this one. But for now, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.